much needed reality check.
Much needed reality check, that's the way to put it, really. And frankly, let's ask our guests the same question. Is this a much needed reality check for some of the entities? Hemen Kapadia, Senior VP Institutional Equities at KR Choksi Stocks and Securities, with us on the show. Hemen, good having you. Good afternoon. Great, in fact, great talking to you today, because such a day requires experienced hands. Tell us, what does the screen tell you? Because the Nifty, if you see, will not make you feel that it's that bad, but it's actually a lot of pressure out there.
A very good afternoon to you, Niraj. Thank you for having me on the show. It's always a pleasure. Absolutely. The Nifty hasn't done much, but otherwise it's chaos and mayhem all around. We spoke last Monday also, Niraj. I said the VIX is elevated. Two things had to happen. Either the market goes down or the VIX goes down. The VIX didn't go up, the market went down. And there were no apparent event risks left on the horizon. Credit policy discounted, Federal Reserve meeting discounted, nothing major. So the VIX has finally taken its toll. The dollar index continues to be on the strong side, Niraj. So that's another point of pressure. And like I think you also mentioned, I think there needs to be a reality check. The laws of gravity need to catch up, because some of these stocks were going simply berserk all over the place as if they've discovered gold and silver, not even silver, diamonds in the mine. So somewhere we needed a decent time price correction. We're riding on top of a phenomenal move. I mean, you can't run 2 marathons in a row, right? So you had to take a breather, and that's what's happening. And where things have moved too fast, I think that's where it's been hit. And if the results are bad, you're slaughtered. So frankly speaking, it is the mid caps and small caps which have been battered more, like you mentioned, Niraj. Bank Nifty, we've been down for 5 weeks. This is the 6th week. I think HDFC Bank, ICICI Bank, and Axis SBI, I think these bank stocks weighted would be 70-80% in the Bank Nifty. So I think HDFC Bank has managed to sink everything as far as the Bank Nifty is concerned. So frankly speaking, absolutely on point. Nifty hasn't gone so bad, but markets are were in complete chaos. So I guess we needed something like this. So it's going to take time to play out. I'm not so bearish yet. Important levels haven't been broken, Niraj, and things aren't so bad. But yes, a reality check is what I would say this is.
A reality check is the theme of the day, and NHPC is another company that seems to be getting a good dose of it. Let's pull up that stock results out, and then you're seeing that sharp fall off the cliff, down 15%, just as I've been seeing in the last couple of minutes. Has gone from a 10% to a 15% cut. The first numbers that we have, revenues are at 2,055 crores versus 2,582 year on year. So drop over there. Net profit has also slid. And you have that figure coming in at 628 crores versus 776. Look at the cut on the EBITDA, 57% down at 720 or 721 crores versus 1690 crores. Another one of those favored golden boys and golden girls of PSU companies which had run off. Margins have also actually been slashed quite a bit, more than half, from what I can see at first cut. So yeah, you're seeing that pain play out as well. Sudeep Bandyopadhyay also joining us on the show today. He's Group Chairman, IndiTrade Capital. Very good afternoon to you, Sudeep, but not a very good afternoon for some stocks and companies. I'll quickly pull up the railway pack as well, because they're feeling this shared pain all over of what's happening with public sector owned companies, and RVNL down about 9% right now, but the whole lot, Railtel, let's see what's happening with Jupiter Wagons, Titagarh, Texmaco. Sudeep, what do you reckon? We've been having this sort of debate in the newsroom about whether this is a short-term reality check cut after a run-up of valuations, and then you will see some of these companies carry on their uptrend, considering it's a big focus in terms of government policy, or is there more pain left?
Well, I have been maintaining my view that some of these PSU, particularly in the defense and railway space, have really run ahead of the ground reality. I'm not doubting the intention of the government or the initiatives taken by the government, as well as the order wins or the business wins by these companies. They are real, and they will definitely yield results over a period of time. But the key is the results will come over a period of time. And I think the market was factoring in things a little too early. And that is unrealistic. Defense company getting contract for submarines. I mean, one has to realize that the submarine manufacturing is a long process. It takes multiple years for this to happen. Now, if you start factoring in that earning and discounting it and giving a valuation, I think that's a bit unrealistic, and that is what was happening. So, time-wise correction was warranted, and I'm pretty sure that that's what is happening. Or even if it doesn't happen now, it recovers tomorrow. It will happen at some time, because eventually it has to catch up. The reality has to catch up with the valuation, and that has to happen somewhere. These are good companies. There are a lot of important things, good things which have happened to these companies over the last 5, 7, 10 years, and they are on a good trajectory. There's tremendous government support. The environment is right, but the valuations were not right, and that will have to get kind of resolved at some point of time or the other, and probably that's what is happening.
So, Deep, beyond PSUs, the clutch of other stocks which on poor numbers are coming off as well. We are at the fag end of the earnings season, I understand, but do you anticipate the pain at the broader end of the spectrum to worsen? Because the interest around India seems to be alive and kicking if almost any sell-side brokerage is to be believed.
Niraj, not really. The way I look at it, I think, fag end of the earnings season, normally companies come out who don't have anything good to talk about. I mean, this is a very general statement, may not be specific to any company, but that's the reality. And, I don't want to extrapolate that into future. I think, some of the companies have come up with results like Tata Power and all come up with results which are much below the market expectation. There is a rationale for that. But whatever we want to say, the reality is there was a little bit of froth in the market, and probably that will get taken out at some point of time. After such a humongous rally, both in India as well as globally, I think bit of correction, bit of consolidation, bit of profit taking, whatever name we want to call it, is par for the course. I don't think we should get too perturbed with this. Fundamentals of the market, the structure of the market hasn't changed. I strongly believe that we will maintain the positive bias in the medium to long term. Short-term corrections, short-term this volatility is bound to be there in the market the way it is poised.
Let's talk about, you mentioned Sudeep, Tata Power, and let's see what's happened to Tata Power. That is a stock of the day, not in a very positive way, but that entire pack, even an SJV, and down 20%. And I mentioned that in my opening. So the energy space seeing a lot of pain, but so is Tata Power. The shares have fallen after the company reported muted post-tax profits in Q3. Now, earlier in the day, we spoke with Praveer Sinha, the MD and CEO, about the company's Q3 performance and outlook. Listen in to what he said.
We need to look at the results, that consistency is coming in the company. And second is that whatever we are doing, it will be sustained going forward. So that's the good part of the result. Also, the important part of the result is that we are seeing that our performance is now tilting more towards our core business. All our existing operations, whether it is our generation or it is our transmission, distribution, renewables, have yielded good results. And this time, nearly 71% of our profit has come from the core business, which we expect in the future quarters will move to 80 to 90%. Secondly, what is also important is that many of the changes that we have made is stabilizing our operations, and this will ensure that there is a much better and consistent performance in the long run. So it's a very satisfying quarter as far as we are concerned.
All right, satisfying for Praveer Sinha, but not for the investors of the Tata Power stock. For sure, near its day's lows at this point, nearly 6.5–7% down. Hemen Kapadia, do you think there is a possibility of a bounce back here on Tata Power?
Actually, Tamanna, from a very near-term point of view, I think it could take some time. But the bigger picture remains unequivocally bullish. I mean, okay, time like this, I don't think anybody bothers much about the bigger picture. But support comes in around 360. So we're not very far away from there, Tamanna. So 360, 340. I think 360 should provide some cushion for a recovery. Sustainable at this point of time? Not sure, but I think 360 should provide support for a bounce.
Sudeep, very quickly before we take that break, on Tata Power or some of the power companies, because it is believed that these are the last bastions of growth. Somehow Tata Power has kind of failed. You answered that briefly. You reckon that there'll be more pain in store?
Not much. I think the coal prices have come off, and Tata Power, there's a combination of Indonesian coal as well as local coal. The coal realizations are down, and I think predominantly that's the reason why Tata Power, the profit and the margins were down. As far as some of the other power companies are concerned, like NTPC, I'm pretty confident and bullish. And I think, fundamentally, medium-term, the power sector is a great place to be in.
Okay. We come back and we try and talk about the commentary that is coming from one of the auto ancillaries, which is Bharat Forge, wherein they have cut what they would do in terms of growth for Q4 and further into FY25, and which is why the stock is down 11%. We'll connect with the management as well. Stay tuned to NDTV Profit. We'll be right back.
Check on the markets, and the largest pain in the bank Nifty, I would reckon, nearly 2% down, even as you are seeing that ongoing profit booking. But more than the Nifty and the Sensex, one would reckon that the broader markets are seeing a tumble this afternoon. Let's pull up Bharat Forge and that statement from Baba Kalyani that you're seeing on your screens. Perhaps one of the reasons why the stock is feeling pain. A statement from Baba Kalyani talking about how growth momentum will moderate in both domestic and export markets across industries looking into Q4 and ahead on FY25. He says our endeavor will be to outperform the market driven by our diversified business mix. But the outlook, he's saying, will be muted. Or to specifically quote him, growth momentum will moderate. Himen, a quick take from you on Bharat Forge.
Actually, Tamanna, Bharat Forge is one of the better looking stocks, frankly speaking. And we have seen it actually post a fresh all-time high yesterday and today. And now it's virtually fallen off a cliff. So it's a bit perplexing. 1300 was important, 1180 is important. I'm saying was because in the past tense, everything has gone for a toss. We've seen huge volumes. I think it's volume. We still have half an hour left and volumes are more than 40 lakhs in the cash market on an NSE. We're not very far away from supports. Support comes in at around 1126 and the intraday low is 1131. So I say for the time being, it's going to take a breather over here. But yes, if it ends, okay, we remain on the week, still too early to take that call, but it ends here like this, it's a huge downward bar reversal on the weekly chart. So
got it.
I'd say a panic seller seems to be petering off as of now.
Okay, well, let's talk to Amit Kalyani, Joint MD of Bharat Forge. He joins us right now on the show. Amit, good having you. Thanks for taking the time out. Niraj here.
Hi, Niraj.
Hi. Well, I think the statement around what could happen in Q4 and FY25 seems to have spooked the markets more than the performance. Amit, what's changed in this landscape for you guys to be cautious about the Q4 after having what has arguably been not such a bad the first 9 months? So what's changing?
Oh, I think we've had a good 9 months. Our 9-month profits are almost equal to last full year's profits. And, for Q4 will also be good. But I think, if you look at the end markets that we serve and the end geographies that we supply into, there is a lot of stress and there is a lot of, uncertainty in those markets. Many of the markets are starting to slow down, show signs of stress. And, they have all kinds of issues, right? From geopolitical issues, political issues, financial issues, other issues in those markets. And I think we need to be cognizant and be responsible in communicating to the market and to our stakeholders and not just always paint a rosy picture. And I think we always look at giving our stakeholders a slightly longer term view rather than a short term view. We've gone through these cycles many, many times, and we've always come out stronger through these cycles. In this cycle, particularly, we have 3 verticals which are brand new, which is our industrial castings vertical, which is our aerospace vertical and our defense vertical, which are unhindered and which will continue to provide us a lot of growth momentum. And they also have a lot of export business. So I think overall, as a company, we will do well. We will grow with double digits in spite of the headwinds that we see. Hopefully, post-elections, we should start seeing a lot more clarity on, reform and capital formation in India, which will lead to, demand for our kind of products. But I think one should be cautious because when you look at what's happening globally, especially in Europe, I mean, there is no doubt that there is a lot of pressure.
So, Amit, is this some signs of maybe client conversations the way they may have happened? And I love the statement. In fact, both me and Tamanna love the statement that you made that it's responsible on a part of a large leader like you to tell it out to investors, not just of your company, but people who are watching economy about what's happening. So my question, therefore, is, are these client conversations that are talking about maybe some stress coming in as the year rolls on? And is this predominantly global in nature? Because the hope is that India still, I mean, if the RBI is to be believed, right, RBI is to be heard, 7% growth for FY25. That's probably not a bad scenario to be in.
That's a great scenario to be in. In fact, I think that whatever pressure that we see will be transitory, will be short, and will allow us great new growth opportunities. With a strong balance sheet, with strong execution capability, I think we stand only to gain from these adverse situations outside. But it's going to be a little bit of time, for the, let's say, the proverbial, let's say, for it to hit the bank, if you want to call it that. Meanwhile, Q4 is not bad, but I'm still a little suspect or skeptical about next year. Although we will grow, I think the underlying markets are not going to be as strong as everybody wants to believe.
Got it. These are tall.
I mean, look at China, for example. Even China. Sorry, Niraj.
No, please continue.
If you look at what's happening in China, the bad debt situation in China, it's like an onion being peeled. More and more layers and more red layers are coming out, and red ink and bad news. So China being a big growth driver for the world economy, I think those days are over. China for China now. And what happens with that is India is going to become a big growth driver, and 7% growth, next year, if that's forecast, that only has to accelerate in order to provide, overall growth for the markets.
Okay. We'll come back to this piece as well, but just, in justice to talk about what you've done in the quarter, what you could do in quarter four. And here's my question. When I look at what you've done, Amit, not just in this year, but since maybe the March 2022 quarter, you're probably sitting at the highest EBITDA margins. So you've done commendably well on that front. Revenue numbers are looking okay relative to maybe the rest of the industry, looking very good. Now, in a slowdown scenario, potentially slowing down scenario of FY25, are these manageable? And of course, what led to this kind of growth that you've seen in quarter three?
I see. What has led to this growth is actually increase in our components business, increase in our industrial business, increase in our defense business. Please remember that our oil and gas exports are down 2/3. In spite of that, we are growing. So some of these markets will come back, some markets will go down. So overall, it may end up balancing each other, and we will still continue growing. I think profit outlook for 25 will be higher than 24. All I'm saying is that the magnitude of jump will not be as much.
Hi, Amit. Tamanna here. And I really must reiterate what Niraj said. I really appreciate a management coming out and saying clearly that this is how we see things panning out. We don't want to paint a rosy picture. It's rare in these times. So kudos for that. Having said that, you also go on to say that while external circumstances may seem to be negative, demand may moderate, etc., you will outpace the industry. So let's get into a bit of detail on that. How exactly do you think that will be achievable? And can you set any guidance on that end?
So look, in terms of guidance, I'd say that high single to low double digit is where I see our growth next year. Now, if we have some significant new wins in any of our defense or other businesses, that will give it an additional boost. But that's where I see it. One flip side that I see is that in a market that goes down, sometimes costs also come down. So profitability can have a positive impact as well. But that remains to be seen. Overall, I would say that we're well placed. All the new verticals that we're in, which is defense, industrials, and aerospace, are seeing high double-digit growth. And we expect that to continue. This is very profitable growth, and it will allow us to, offset a lot of the other reduction as well. So I'm not pessimistic about the year. All I'm saying is that I'm being realistic.
Do you see your India focus increasing? You explained the
absolutely.
Yeah.
Absolutely. Actually, the way we've started classifying our manufacturing now is India manufacturing versus global manufacturing. And India manufacturing is going to be our biggest growth driver going forward. If you look at the casting business that we've bought, the industrial forging business that we bought, that added, almost close to 1,000 crores of capacity to our company, and that can double in the next 2 to 3 years based on, just us getting more customers with the existing capacity that we have on hand.
Amit, on the word on oil and gas, I mean, and the exports having come off so much, the recency of the financial health of some of the global oil and gas majors seems to be very good. Do you expect a turnaround? Because everybody from Chevron to Exxon to whatever else is posting record high profits. Do you think there could be a turn around the corner?
See, what is happening, Niraj, is the kind of sector that we're in, which is the shale oil sector. There are a lot of small companies which are exploration E&P companies. And these E&P companies in the low interest cost regime used to drill multiple wells and explore and cap them when not needed. Now with interest rates being what they are, they are not doing that, let's say, exploratory drilling and, exploring as much. So they're only building capacity when it's needed. Plus, if you see in the US, the transportation infrastructure for oil and gas, especially for gas, is not good. And even the export infrastructure, it's only now being put in place. I think these two will also provide a flip for the overall oil and gas sector once it comes into place.
Okay. One small follow-up from my end on the other space. I remember sometime around September or October, your peers, and I had asked this to you as well, but your peers had mentioned, from the forging side at least, companies in the forging space had mentioned that Europe is going to see a lot of replacement demand come in on the forging side, and therefore the outlook on forging demand will not look weak. Now, US, we've seen some bit of weakness. You're talking about how Europe business looks slightly wobbly. What could happen on the auto anch side for you as well as a company for 2024?
See, the pass car side in Europe is okay. The truck side is definitely slow, and it is going to be slow this year. There's no doubt about it.
Got it.
I mean, even if you look at Volvo's own, or any of the other large OEMs, they've all talked about this, that there will be a slowdown. But, slowdown is great for us because it allows us to gain market share, shift new business here. We've always come out stronger out of these slowdowns. So it's not something to be worried about.
Got it. Amit, my last question, at least, and excuse me for not knowing the numbers offhand, but what about leverage and interest costs, because they seem to be getting pushed further and further away with the rate cuts? Is that an issue at all?
So we are repaying between this year and next year about 1,000 crores of debt. And we still have about 22 to 2,500 crores of cash on the balance sheet. So we're absolutely in great shape.
Okay, great.
Thank you.
Okay, Amit, thank you so much for taking the time out and being with us. All the best. That's Bharat Forge. And Sudeep, before we take that break, have to get you in on this conversation as well. Here's one large auto ancillary saying that growth could be a concern. We are forewarning. And clearly, while they're saying could be, the statement mentions that if they've gone ahead and said that FY25 could see moderation, further into FY25 is the moderation, then there's a slowdown anticipated. Is this a Bharat Forge specific issue? You reckon some of the others could face this problem as well?
Well, Niraj, I definitely don't think it's a Bharat Forge specific issue. It's good that they have flagged off. I think what they're talking about makes a lot of sense. There is probably no point in painting a rosy picture for a company which is manufacturing for the world. Multiple pockets of the world, whether it's Europe, whether it's China, whether it's parts of Eastern Europe, there's a lot of turmoil going on. West Asia. So obviously there is, there are challenges, and they are kind of recognizing those challenges. While India may be all right, the other global markets are not that promising at this stage. So they are flagging that off. But as far as Bharat Forge is concerned, I think there are two areas which Mr. Amit Kalyani mentioned, and I think we have been pretty bullish on, is aerospace and defense. I think both these spaces, they are gaining traction. It used to be a very small fraction of their total turnover, which is now continuously increasing quarter on quarter. And we believe that this is going to become a very, very important factor, maybe in 3 to 5 years' time. And we know Defense Make in India is a big thrust for the government, and Bharat Forge will definitely play a role with being an established industrial player. So we are looking forward to that. Aerospace is a new area where they are doing a lot of work, and I'm sure that also will become an important area. So we'll carefully watch these new developments while monitoring what's happening as far as their core business sales and core business numbers are concerned.
Absolutely. Quick look at the markets before we take a very quick break. Sudeep and Himen, stay on with us. The weakness continues. IT stocks showing some kind of an improvement, but overall you are seeing a market in the throes of profit booking, I would say. Not really a meltdown of any sorts, but yes, you are seeing profit booking definitely on the horizon. The Nifty now under the 21,650 mark. Very short break. We're coming back with buy today, sell tomorrow, BTST or STBT, however it may be called, for the afternoon. Stay tuned.
All right, back with India market close and not looking too pretty. Very quickly, let me get in Agam Vakil, my colleague who can best break down what's happening on the derivatives side in the session today. Agam, what is the data saying?
There was expectation that today would be a day of consolidation, perhaps in advances, but that really hasn't come through. And in fact, there has been further weakness on the benchmarks. The Nifty has come off by around 0.7% as we see, more longs, more shorts added to the system. But it is perhaps the Bank Nifty which is taking a little bit of the focus, the sheen, the thunder out of the Nifty, and that's corrected another 1.5%. To put things into perspective, Thursday was a day where we saw a sharp cut. Friday saw about a short covering, and today we saw another down move of around 150, pardon me, about a 1.5% decline there as far as the bank Nifty is concerned. And that has weighed down on the Nifty 50 as well. A lot of cost constituents there. Now, this as far as your options open interest exchange goes. Let's talk about your open interest distribution, and we are looking still at a 500-point range, but now we will start to see a little more gathering around 21,500 in terms of puts. So we keep an eye on that one as well. A lot of traction has come through in, well, your stocks. And the stocks, of course, at the moment are where we are seeing a sharp 15% knock on Bharat Forge. Of course, we just spoke to the management, but there really isn't any respite there because it's currently locked in a lower circuit of 15%. Of course, it's an F&O circuit and shorts building in there, along with Bandhan Bank, which are reacting to earnings which came on Friday post-market. Besides that, we have shorts for Nalco as well. Astral and HCL Technologies, on the other hand, looking at longs among stocks which are seeing unwinding. Again, a lot of longs unwinding in SPI, United Breweries, Petronet LNG, and of course, short covering for Divi's Laboratories and Escorts. But once again, as we move into tomorrow's weekly options expiry of the Fin Nifty, there will be a lot of focus on the private sector banks, specifically something like a Kotak Mahindra Bank and HDFC Bank, which are in fact continuing to weigh on the benchmark. And that is something that we will be keeping an eye on as we move into trade tomorrow as well.
All right. Thank you for that, Agam. So a bit more volatility expected perhaps tomorrow as well. The startling story really is, and let's pull up the CPSE index, the Nifty CPSE, which tracks all your public-owned companies or your government-owned companies. That's nearly 5% down now. Yeah, 4.5% to 5% down. And SJVN, NHPC now beaten down 16%, NLC, Cochin Shipyard, Coal India also feeling a lot of pain. Coal India numbers are expected later today, and we'll get a preview of what the numbers are showing. But the market seems to have decided in advance to cut some positions over here. Sudeep, we spoke about PSUs generically, but especially in your power space, you're seeing the most kind of a pain. Any views on an NLC, an NBCC, a Coal India?
I like Coal India. I think this is one company which the market had written off long before, realizing that the traditional energy is still a long way to go. We were all focused on green energy and what green energy will do. I think the realization has dawned now that the fossil fuel will continue for the next 30, 40, 50 years at least. And Coal India has a huge role to play there. Also, the electrification of rural India, which is now almost complete, resulted in significant incremental power demand, which led to demand for coal. So Coal India's demand for coal has increased significantly. Coal India's own efficiency, which was a big question mark earlier, has improved significantly. So both these two factors combined together, I think they are in for a good time in the foreseeable future. It's a reasonably well-managed company, as a dividend-paying, good dividend track record. So I think for a long-term investor, there is absolutely no problem in Coal India. I'm not sure about this quarter results, but irrespective of that, I think it's a good buying opportunity.
All right, stay on with us. Nuvama now has reiterated its MSCI expectations at anticipating India's representation to move around 18.5%. Now, this is significant in terms of inflows that we will see and could be some positive news going ahead. What are the details, though, and why does Nuvama have these expectations? Mahima is joining us with more. Mahima.
Right, Tamanna. So as you rightly mentioned, we are expecting that our representation in MSCI index will move up to 18.5%. At present, the representation stands at 17.8%. MSCI will announce its rejig changes tomorrow, that is 13th of February, and India could see close to $800 million to 1 billion FII passive inflow. Now, PSUs are ruling these inclusions in Feb review. If we talk about the global standard index, the names that are making to the cut according to the average flows and volumes are Jindal Steel, Union Bank and NMDC. If we talk about the inflows, NMDC might add approximately $186 million, PNB will add around $180 million and BHEL will add approximately $156 million. If we talk about the small cap index, the names that are might make to the MSCI index include Orin Pro Solutions, Jupiter Life, Inox Wind Energy. And in terms of inflows, we are expecting that IREDA, Cello World and Honasa are the top 3 names that can make it to the list. The exclusions include Prestige Estates, GMR Airport Infra and RVNL and also Privy Specialty.
Thank you for that, Mahima. You are seeing a movement in some of those stocks today, but overall, yes, more pain than gain at every end of the spectrum. Himen, should we come to you on your BTST ideas? Where do you see spots of optimism in a market like this, or do you see opportunity galore?
Well, to Tamanna, if I can sidestep your question about the BTST or STBT, because the intraday chart shows some sort of a mild oversold situation, while the daily setup seems abysmal. So either way, it's going to be a Hobson's choice. Opportunities galore, but I'd wait a bit. I think that the galore part hasn't yet started. We need the 21,550 breaks. We'll get everything at 21,200. So I'd wait just a wee bit. But yeah, at the risk of a gun at my forehead, on my this thing, I have one STBT on CanBank at 545, stop loss 549, target of 536 on CanBank, risk reward ratio 1:2. That's an STBT. A BTST on Chola Financial at 1126, stop loss 1129, target of 1140. Risk reward ratio 1:2. Once again, request to investor, if it's possible, avoid the STBT or a BTST because it could go either ways. Like I said, oversold, setup not looking positive. So I don't think it's a market where one should do carry home a trade just for the sake of doing a trade.
Fair. And no gun to your head. If you think that this is not a market for a BTST or an STBT, that's absolutely fair. The Nifty, by the way, has cracked under the 21,600 mark.
Somehow, I don't know, Tamanna, I've been saying for the last few days that the market, some of the indicators, the quant indicators, all pointing towards this being the zone from where the bounce back can happen. We were terribly wrong. I'm not the one to predict markets. But somehow, I tend to agree with him. And today on this front, it seems a bit overdone. Now, this may be the famous last words, and we may see a further crackdown tomorrow. But somehow this seems a bit overdone. Won't be surprised if the rest of the week we may consolidate or actually be higher from where we are right now.
It's tough to say right now.
Very much so.
But Himen is saying that right now don't get into BTST more.
Yeah. So we to anyways just just saying it out. Just it looks okay.
Correct. But anyway, like we said, 21,600 has been breached on the Nifty. Himen, where is the next sort of fault line you see now that we're under a 21,600, 21,587, and for the Bank Nifty as well, which honestly speaking has had the deeper cut?
Okay. Frankly speaking, the Bank Nifty has been getting cut for quite some time now, Tamanna.
Yeah.
Coming back to the Nifty, my level was 21,680. Obviously, that's gone. 21,550 is the next level, followed by 21,338 and 21,137. So I believe that even if I feel a small bounce consolidation is there, but the inherent weakness might, up till now, the dips have been bought into, the decline fizzles out, soon we make a new high. I think it might take a few days before that happens. So these are levels on the downside. If parity has to be restored for the Nifty, we need a closing about 21,834 on the spot. I don't think that's happening at least the next couple of days. I'd love to go wrong on that. And the second, the Bank Nifty that you speaking about, 44,483 is very strong support. Last time that we closed below that was on 28th November 23. So 44,483 is very strong support, and Bank Nifty has been down for a long time. I would not like to short the Bank Nifty. I believe there can be a surprise recovery coming in, if not tomorrow, the day after. I think the villain of the piece is HDFC Bank. So if there is even a mild recovery in HDFC Bank, which is quite oversold, I think we will see a positive impact on the Bank Nifty. Upside levels, 44,950, 45,600. So Bank Nifty is something I wouldn't touch. I believe it has the propensity to surprise a bit on the upside.
Okay. Today is a day when even the good ones are getting punished, right? The numbers, as Tamanna was marking on your screen, Samvardhana, Motherson, the EBIT numbers are much better than the revenue numbers. Margins is stronger than what they did.
And look at the EBIT, 49% up.
Exactly.
Mood kharab hai.
Mood kharab hai. I think वही है. And look at the net profit. For Mazagon, okay, it's in the green. Sorry, I got confused. But Samvardhana Motherson is one example. Inox Wind is down 5% despite the fact that the margins and the numbers were much higher than the others. So everything which has even delivered good numbers is getting punished. Bharat Forge, good numbers, just that the commentary is weak, of course, and therefore that is justified. But some others, no, not so. And
if you look at the commentary though, Niraj, it's a more atmospheric sort of judgment. They're not saying that we are going to have a bad year. They're saying industry-wise, this is what we see happening. Demand will moderate, and lower growth.
Lower growth, and therefore maybe that's I reckon the reason why this stock is punished the way it has been. But Samvardhana Motherson, Sudeep Bandyopadhyay, would you come in? I mean, because again, like Bharat Forge and Auto Ank Major. The numbers are not too bad. We don't have their commentary as of now. But if something's weak for Bharat Forge, probably true for some of the others too. And China is a big market for Samvardhana Motherson, I presume. I'm just trying to understand. The numbers look rock solid. Is it the global picture spooked by Bharat Forge that is leading to Samvardhana Motherson also correcting the way it is?
I would suspect so, Niraj, because the numbers are rock solid, and it's a great company. I love this company, and they have been doing pretty good work, and they are gradually expanding their component per car, and it's a very systematic, structured way. I also believe that introduction of EV will make these companies even stronger, because their component per car will increase even further. I think the commentary of Bharat Forge about demand in FY25 and the rest of the current calendar year is spooking the market as far as auto and demand is concerned and auto and growth is concerned. So probably that's the reason we see a similar kind of a fall in Samvardhana Motherson.
Mazagon Dock also on your screen right now, and big uptick over there, and stellar set of numbers versus even estimates from what we can see. Look at the sharp upswing, a rare sight in today's market. Your net profit is more than double of Bloomberg estimates, 77% up year on year. Consolidated, this has been stock of the year in a sense for 2023 and has turned out a stellar set of numbers. Revenue is also showing a healthy uptick and 30% up really. So you're seeing Mazagon Docks responding well. Himin, a story that you can hop on to right now?
I would take a footstep, Tamanna. I wouldn't make a complete hop actually. But yes, upward bar reversal, like you mentioned, in a market like this, frankly speaking, is very gratifying sight. The setup has been positive but corrective. So yes, I think the respite makes you feel a bit good. Yes, 2220 closes above that today. I think we see a near-term bounce coming in. But if I can draw your attention a bit, Tamanna, we've been 6 months in downtick into a corrective phase. So the setup is a bull market correction in the sense we've gone up, we've retraced. The correction is happening by moving sideways and not going down. So inherently we are in a bull market, and within the bull market we're seeing an intermediate correction, which I don't think has ended today. I believe it could be some time away. But yes, if it sounds like sacrilege, but if it comes through 1900 or maybe 1800, that'll be the time to buy.
Okay, 1800 is the time to buy. We may be some way off from 1800 right now, but Mazagon Dock bucking the trend in this particular market. Let's talk about another space which is not doing too badly, and I'm going to pull up a Coforge, which seems to be, steady rock, especially on a tumultuous day. Already that stock has seen quite a run up, another 2.5% up today. You want to come first on this, Himanshu?
No, well, sorry, I think I've lost that feed from our guests, but the point being that it's the last 5 minutes of trade left. Before we get in the closing strategies from Himen, can we actually hear out from Inox Wind's Devansh Jain, who spoke to my colleague Anushi about the company's Q3 and the growth drivers going forward?
It's been a milestone quarter for us where we've turned PAT positive. More importantly, I think we've been saying this for the past 3 quarters. In Q1, we turned EBITDA positive. In Q2, we turned cash PAT positive. In Q3, we've become net profit positive. And I think we've said as tailwinds are there in the sector and the whole sector is coming back after a deep slumber or a very painful transition pain of the past 5 years, I think we are primed for very significant growth and significant profitability as we keep moving forward. So I think this is just the beginning. The quarterly EBITDA was close to about 100 crores. We've raised significant amount of capital over the past 6 months. We raised 800 crores from marquee institutional investors to pair of debt. Prior to that, the promoters had pumped in about 600 odd crores, and then we'd raised another 500 odd crores. I think what's going to happen is over the next 3 to 6 months, our interest cost is going to become zero, number one, as we become net debt free. And number two, as the sector takes off now, and as our order book, which is very large, one of the largest in the sector now, and as we ramp up more and more supplies, I think you're going to see a significant churn in terms of the profitability ramping up substantially.
Well, confidence exhibited by at least Inox, and that's very domestic and very sector specific, and you can assume that. Okay, we have minutes away from market close. Amy, a quick word. Maybe you gave us some closing strategy, but I want to pin it down. If somebody has to look for one closing strategy on a stock, again, it need not be STBT. It could be sell today and buy after a few days, or not be BTST as well, but one stock.
Okay. I would say, one sec. For me, the toss-up is between Adani Enterprise and Adani Port. In a market like this, Niraj, they've held rock solid firm. So, I mean, that is simply amazing resilience. So, I'd say Adani Port to buy, not as a BTST, but for a few days, because 6 days of consolidation and the stock is holding in a market like this. So, a relief rally or even a recovery bounce should take Adani Port to 1300, I think.
Okay. And Sudeep, just before we let you go, in a nutshell, of course, any businesses that have looked interesting recently? It need not be a buy or a sell recommendation, but just a business recommendation.
I like the business of Larsen and the way they are poised, both domestic as well as international. We know they're getting lots of international orders. 1/3 plus order book is international already. And also the margin profile of the company is changing. We know that they have moved out of many unrelated diversifications. Working capital has improved. So earnings, the estimate, the way we look at it, margins and earnings estimate is improving. Structurally, it is moving into a very, very good position. And for long term, I think it's a fantastic stock to look at.
All right, let's take a look at how we are closing in today's market, and it's been a rough day. There is no doubt of that. We look at where we're ending. All right, we've managed to at least close above the 21,600 mark so far. So Nifty is looking like it recovered from those sub 21,600 levels. The pain on the Sensex as well, but I want to pull up the Bank Nifty. I want to pull up the Bank Nifty and the broader indices where the real pain is. Your PSU banks saw sharp cuts today. Your entire PSU basket has seen very sharp cuts. PSU banks down nearly 5%. And your biggest components, they're hurting. Bank of India, other stocks like that are all down in the red. Let's pull up the heat map and see what kind of closing we're looking at and what we're getting into. It's just the pharmaceutical pack which has shown some signs of life. So pharma, IT would be the green ones today in the market, which are showing an upswing. Dr. Reddy's, Apollo Hospital, good numbers. DV's, decent numbers, or at least relatively seems like it. Wipro, HCL Tech, all of that is fine. But Coal India, and yeah, markets have closed there. Coal India coming in ahead of its numbers, down nearly 5% already. Hero Moto also down 4.5% on numbers that seem decent. ONGC, again, you have a quarterly number which the street doesn't seem to have liked. So you're seeing that weakness really persist. Advanced decline ratios, and we'll see where the markets have ended. What's the kind of breadth that we're seeing in the markets today, which started relatively on a positive note. So we'll pull up those advanced decline ratios for you, and look at the skew over there. Look at the skew over there, where you're really seeing both an 5 times decline ratio there in the markets today. So about after mid-morning, that gap has only widened as we've come into close. So what has not worked? We've already told you that public sector companies on high valuations are really being hit. So are railway stocks, so are energy stocks. The Tata Power was another key loser that we saw today. And that's the kind of trend that perhaps volatility that we will see for the next few days. Tata Power down finally 8% after its quarterly numbers. And NHPC too, I just want to pull up an NHPC as well because their numbers had come in before close, and that's closing about 15% down. So all in all, a tough day at the markets. Will this be the end of the pain? Are we going into oversold territory where we could see a bit of a bounce back tomorrow? Well, you'll have to join us back tomorrow morning for that and more. But for now, from Niraj, myself, and the entire team that puts together India Market Close, thank you so much for joining.
Thanks for tuning into Talking Point. I'm your host, Niraj Shah. Our guest today is Rajiv Batra, head of Asia ex Japan and China equity strategist at JP Morgan. Rajiv, welcome to the show. Thanks for taking the time out. I hope all is well. Just wondering, what are your thoughts around what the world markets do in a year which is fraught with election risk as well as geopolitical election calendar and the geopolitical risk being as heavy as they are?
As you have rightly pointed out, 2024 is a record-breaking year for elections, with elections taking place in 77 countries. Although the US elections are arguably the one race which will going to have a broad global consequences. But that's where we will need help of navigating the equity markets, particularly the high beta Asia or emerging market equities. In that, the idea should be trade rather than invest and go through with earning cycle, because the P re-rating phenomena or valuation re-rating phenomena will be largely dependent on the monetary policy maker. If we see any kind of a rate cuts and easing, then valuation will come into play. If not, then earnings will be buy all end all for market to track, and that will be driving the performance from here on. But that said, there will be cycles within the cycles that will play out, like domestic cycles could be divergent from what is happening globally, and particularly in the domestic markets like India, where they are having a long-term growth prospect in play, structural areas are working, so that will help them do well in this kind of, you can say, a very complicated year or an environment to outperform the emerging market equity.
What's your sense about what the Fed or central banks at large could do? The beliefs have been very, very disparate, and post the Fed comments as well as the comments from some of the FOMC members in the last 3 or 4 sessions, the view around when the rate cuts start are very, very different. What's your base case, and when do you think the market starts discounting that?
13th December last year, Fed took a pivot by saying they may need to relook the policy stance, and within the dot plots, it was revealed that we may witness 3 rate cuts this year. So bond market or equity market pricing shifted quite rapidly, and at one point of time, start of this year, market was pricing in close to 7 rate cuts this year. Now, looking at the inflation data, which is slowly, steadily making a comeback, robust economic growth print in the US, and still a broad-based gain in employment, Fed is going to take some time to go for either a rate cut or say we are totally done with this cycle. Premised on that, JP Morgan economic team is forecasting the rate cut starting from June this year, and we are forecasting 5 rate cuts, 1 in June and then 4 in the second half. Once Fed starts cutting, that will open door for Asia, emerging market, even India to relook at their monetary policy situation. But before Fed do anything, can emerging market or any other Asian countries react and go before Fed? Chances looks pretty low.
Okay, yeah. And to an extent, the Reserve Bank of India in the policy meeting earlier kind of highlighted to that effect as well, that the eyes on the globe, and of course they also mentioned about the global debt sustainability, but it seemed in some fashion that central banking, global central banking would probably drive risk assets. Just one perspective. I read in your note very interestingly, because I was looking at Asia notes more closely by virtue of our viewers being such a large dominant Indian population, which is that you mentioned that you might be partly constructive on China. Please correct me if I'm wrong.
And for the central government, 60 state governments, 21 states, put together 16. We are somewhere around 81 odd is what you indicated in your press conference last week. So is this a concern that there is no known debt benchmark to be reached? Just like say a government wants to attain FD of lower than 4.5 by 26. So any thoughts on this front, and how this stickiness can come down, and anything that you have been suggesting to the GOI?
What we have been as Reserve Bank suggesting to GOI, that is bilateral and that is direct communication between the central bank and the finance ministry. So I would not like to touch upon that. But the two other aspects which you have mentioned, I think the first one is you said that the interest payments are rising. Now, when the inflation is high, naturally the central bank has to take monetary policy action by increasing the rates. So the borrowings which are done, the government borrowings which are done during that period, naturally the borrowing costs will be higher because the yields should be higher. But as we move forward, as inflation has started moderating, now going forward when inflation moderates, logically the final point will be where the bond yields also come down. And in fact, I should say that look at the 10-year bond yield. The 10-year bond yield, I remember in May 2022 when we started this rate increase, the rate hike cycle in May 2022 when we started, the 10-year bond yield was 7.14% or so. Today, the 10-year bond yields have again come down to about 7.17, 7.18% in that range. But in between, the bond yields had gone up to 7.30, 7.40, and it had remained there for some time. So it is a function of your inflation level and the quantum of liquidity available in the system. If you recall, in the first year of COVID, again, due to the efforts of the Reserve Bank and all that steps we had taken, I think that year the borrowing cost was one of the lowest so far as government borrowing was concerned. So therefore, in the intermittent period, the interest payments, as a quantum, it is linked to the bond yields. So therefore, going forward, when inflation is brought under control, I think bond yields will soften and the borrowing costs of government also should come down. Then their 10-year bond yields are in any case they have started softening, and 5-year also. Bulk of the government borrowing are in these two buckets. Now, the other point which you mentioned was about debt benchmark. You see, during the COVID, at the peak of the COVID, the general government debt to GDP, that is central government and state governments put together, the debt to GDP was about 88%. That was the peak which was at the time of the COVID pandemic. That is because the government had to give a lot of fiscal support to the people and to various sectors of the economy because of the challenges coming from the COVID. Now, so therefore at that time the debt to GDP of the general government had gone up to 88%. Now it has come down to about 81% or so. And with the fiscal roadmap, consolidation roadmap which the government is following, the target of reaching 4.5% in 25-26, I would expect, the debt to GDP also to start moderating. And incidentally, it is a very important point which was mentioned in my monetary policy statement. I had devoted one paragraph, if you recall, to the problem of government debt in the context of the global economy. And the global debt to GDP is expected to cross 100% by 2030. But even now, the debt to GDP of advanced economies is far higher than the debt to GDP of the emerging market economies. I think emerging market economies are today in a position to respond far better to the needs of fiscal consolidation. And so India is definitely, in the forefront of that path of fiscal consolidation, which the emerging market economies as a group are now following.
Thank you, sir. I'll move on to Siddharth Upasni from Money Control.
Hi, sir. Siddharth from Money Control here. Couple of quick questions. One, starting off with debt, post-budget, the finance secretary had said that the 40% debt to GDP ratio target the FRBM committee had suggested, let's say, historical relic, and that it's from pre-pandemic time, so that needs some sort of a re-examination. Where do you stand on that? And second, just on bond yields, we'll expect any inflows into government debt to rise post-June once it's listed on the JP Morgan prices, the FAR security.
Sorry, I didn't get. That is?
Inflows into Indian government debt will start increase post-June once the listing on the JP Morgan indexes begins. While we know that the RBI takes a look at close look at the bond yields, especially when they are rising. What about when they are falling? If they do fall quite a bit once these inflows come in, is there any mechanism that you have in mind to manage sharp drops in yields? Thank you.
Sharp drop in yields?
In yields, once inflows keep continuing for 10 months, 25, 30 billion, whatever.
Okay, and the first question you said was about the, okay, now I'm not aware of what the finance secretary has said, but on the issue of 40%, whether it is valid today or not, I don't want to comment because and offhand I don't want to comment. There was a government committee which had been appointed, which had recommended I think 40 plus 20, 40 for center and 20 for the states. So government has to take a call. What is the level of sustainable debt so far as government finances are concerned? We are the debt managers of the government. RBI is the debt manager of the government, and whatever view the government takes with regard to their borrowing requirements, RBI's responsibility is to ensure a smooth completion of a non-disruptive completion of the borrowing program of that particular year. But yes, certainly, debt to GDP is a very critical issue in the fiscal consolidation roadmap. And I think if you go by the fiscal deficit target which the government has itself followed against a budget estimate of 5.9, the RE is 5.8. And the general expectation was probably the government fiscal deficit would be this year 5.2. The market was expecting 5.2, 5.3, 5.4, but it is 5.1. So therefore, I think there is every reason to believe that the government will adhere to the path of fiscal consolidation. Whether 30, 40, 50, I would not like to comment on that. With regard to JP Morgan bond index, we have to see how much of it, various estimates are being made by the market. There are also suggestions by participants in the market that some of it has already come in. We have seen in the recent months, constant inflows of, constant inflows both in the FDI and in the FPI route. FPI route is very robust, incidentally. I have given the figures in the monetary policy statement. 32 billion net. 32 billion is the net FPI inflow against an outflow last year in the corresponding period of about $6.5 billion or so is what I had said. So FPI flows are robust. And so JP Morgan, how much actually will come, we'll have to wait and see. And it's not as if, it's all going to come in a single burst. It will come over a period of time. RBI has managed, if you go by our track record, both when there are outflows and when there are inflows, in both the situations, the Reserve Bank has got an excellent track record in managing the flows. And going forward, even this year also, we are confident of handling the what you are referring to, the expected inflows, higher inflows. As and when such a thing materializes, we will be able to deal with it. And bond yields, as you will appreciate, as the central bank governor, I would not like to say how much is the bond yield, whether it will go up or go down, because that is a signal to the market. We don't like to interfere in the, it's a market. The rates should be decided there in the market. The Reserve Bank cannot and should not, it's only in a crisis situation like the COVID we announced the GSAP and all that. But that was an exceptional situation. But on a normal basis, the Reserve Bank, we like to leave the market to determine what should be the bond yields. So I would not like to comment on the yield curve in the future.
We'll move on to Manikanta Patnaik from Economic Times.
Sir, what is your view on the budget's sustained focus on capital expenditure? For fourth year in a row. And sir, a supplementary question. I think I wanted to follow up on Lakshman's question. Two countries with which we had an UPI arrangement today. So are there more in the offering, and which are those countries?
You see, there are several countries with which we are under discussion. Both the Reserve Bank and the NPCI International, which is the international wing. There's a subsidiary company of NPCI to handle their international business. So NPCI International and the Reserve Bank, together we are in dialogue with a number of countries. And the list of countries and the names I would not like to mention, because there is a country on the other side. He may or may not like their country being mentioned in our press conference. So as and when something gets finalized, you will automatically come to know about it. And with regard to that was your question, and what was the first one you said? CapEx. Now, CapEx is a GDP multiplier. In fact, research has shown that the GDP multiplier of capital expenditure is about 1.2, going up 1.2% to going 1.2 going up to about 1.4. So it is a multiplier. It has a multiplier effect on the GDP. And definitely a thrust on capital expenditure is always welcome. I have said it in my monetary policy statement also, that government capital expenditure will support the GDP growth.
Tarun Sharma, Z Business.
I think we can conclude in 5 minutes.
Tarun from Z Business. Sir, I have two questions. First on the green energy front, sir. Government has a plan to net zero by 2070, sir. And there is recommendation from the Power Ministry to RBI to include the green energy funding as a priority lending above 30 crore. Secondly, there is some relaxation in the provisioning for the green energy finance. First question. Second, sir, recently you issued the discussion paper on the capping on dividend part, sir, which 31st January was the last day. So, is there any discussion in the board meeting, because DE has some concern on the dividend capping ban?
I think you have said what Power Ministry has said, what DA views are, and so I am not aware actually of this, but keeping that aside, we examine these aspects. See, ministries of government have their views, they share their views with us. We take them into consideration certainly, and then we will take whatever decision we feel whatever decision appears to be appropriate, we will take that, but it will naturally be based on lot of discussion with various stakeholders, and ministries of the government are certainly stakeholders. So therefore I don't want to speculate on the request suggestion of the Power Ministry or the Finance Ministry on dividend, etc. 31st January was the last date, so comments do take time to, and we get comments in hundreds, so they have to be examined carefully. As and when we take a decision, you will know about it.
Radharaman Mishra from PTI Bhashan.
माइक ले लीजिए, चलिए कंक्लूड करते हैं क्विकली. हाँ,
मेरा सवाल है सर, पहले भी पूछा जा चुका है सर, जो यूपीआई कार्ड के बारे में, रुपी कार्ड को लेकर भी दूसरे देशों में रुचि है सर?
बहुत है रुचि.
और एक सवाल सर और है, थोड़ा हट करके सर, हमारे कलीग थे सर अभी साइबर फ्रॉड के जरिए सर 1.2 लाख रुपए निकल,
सॉरी
1.2 लाख वो बैंक अकाउंट से निकले सर, राइट, और उनको आधे घंटे लगे कस्टमर केयर तक पहुंचने में, और वो पहुंच नहीं पाए, पैसा तब तक निकलता रहा. तो सर मेरा एक चीज पूछना था कि क्या ऐसा कोई कॉमन प्लेटफॉर्म बनाने का आप लोग का प्लानिंग है जहाँ की कोई भी शिकायत करे और वहाँ पर सुनवाई?
नहीं, साइबर फ्रॉड कंप्लेंट के लिए तो एक ऑलरेडी वो तो एक कॉमन प्लेटफॉर्म है ना. व्हाट इज दैट इज कॉल्ड, you have that, no? What is that called?
1930 common number to launch.
1930 है कॉमन नंबर, आप उसमें कंप्लेंट लॉन्च कर दीजिए. लेकिन व्हाट यू आर टॉकिंग, अब हिंदी में बोलूँ या इंग्लिश में? नहीं, आपको जो पसंद है हम उसी में बोलेंगे. ठीक है, मैं हिंदी में आंसर में देता हूँ आपको. तो देखिए, साइबर सिक्योरिटी बहुत जेन्युइन प्रॉब्लम है. दो तरह के सिचुएशन से. एक सिचुएशन ऐसा है जहाँ की कस्टमर खुद बाई मिस्टेक कस्टमर वो बिलीव करते हैं ये जेन्युइन मैसेज है किसी बैंकों के नाम पर कोई मैसेज आता है, वो उसको जेन्युइन बिलीव करके या कभी कभी एब्सेंट माइंडेडली, और ऐसा हो जाता है कि वो OTP शेयर कर देते हैं या कोई पर्सनल डेटा शेयर कर देते हैं और फिर एक फ्रॉड हो जाता है। इसीलिए सारे बैंक्स आपने देखा होगा SMS वगैरह भेजते रहते हैं अकाउंट होल्डर्स को। हमने भी काफ़ी एडवर्टाइजमेंट RBI के तरफ से कर रहे हैं कि किसी भी तरह का पर्सनल इंफॉर्मेशन जो है आप शेयर मत करिए। अगर कोई बैंक से कोई मैसेज आ रहा है, आप डायरेक्टली मतलब जिसमें ये कह रहा है कि ये इसको क्लिक कर दीजिए और ये हो जाएगा, आपका KYC हो जाएगा, ये बिल्कुल बैंक्स ऐसे कभी नहीं करेंगे। आप डायरेक्टली आपका जहाँ पे अकाउंट है वो ब्रांच को डायरेक्टली कांटेक्ट करिए। सो ये एक टाइप का सिचुएशन है जहाँ की कस्टमर मतलब बाय मिस्टेक वो मिस्टेक कर देते हैं और उस बीच कुछ पैसा निकल जाता है। लेकिन हमने ये मैंडेट किया है कि अगर आप डायरेक्टली बैंक को कंप्लेंट करते हैं, बैंक का जो कंप्लेंट मैनेजमेंट पोर्टल है उसमें इफ यू कंप्लेन विद इन 24 और 48 आवर्स वी हैव सेड, 24 आवर्स, 24 घंटे के अंदर अगर आप कंप्लेंट करेंगे और गलती जो है अगर बैंक का है तो वो फुल रिफंड दे देंगे। वो सर्कुलर हमने इश्यू कर दिया है। लेकिन साइबर सिक्योरिटी का ये एक सिचुएशन है। दूसरा सिचुएशन है जहाँ की कई तरह का मतलब हैकिंग वैकिंग करके वो फ्रॉड करते हैं। उस दिशा में बहुत सारे कदम उठाए गए हैं। उसमें रिजर्व बैंक और जो संबंधित मिनिस्ट्रीज है गवर्नमेंट का, उनके बीच हम रेगुलरली डिस्कस करते रहते हैं सिस्टम को और कैसे मतलब मजबूत बना सकते हैं, ये फ्रॉड जो आता है उसको कैसा प्रिवेंट कर सकते हैं। वैसे आपके जानकारी के लिए मैं बता दूं, बहुत सारे हैकिंग अटेम्प्ट्स और बहुत सारे फ्रॉड अटेम्प्ट्स हम ब्लॉक करते रहे हैं, लेकिन वो इन्फॉर्मेशन जो है मतलब वो बाहर हम पब्लिसाइज नहीं करते हैं।